Kriplani ma'am, you there?
Hello.
Yes,
Yes,
madam.
madam. Yes.
Hello.
Hello, sir.
Hello, good morning.
Sir,
Hello,
good
good
morning.
morning.
Good morning, good morning.
कृपलानी मैम शेयर करना है टेलीग्राम ग्रुप पे.
Yes, sir. Sir, हाँ, link, madam, link share. Done, I think.
मैम टेलीग्राम ग्रुप पर.
I'm not able to hear you properly.
मैम ऑन टेलीग्राम ग्रुप.
Yeah, on Telegram group, you have to share this link. No?
Kriplani ma'am, Aditya
Yeah,
sir
yeah.
has not joined.
Hello. Yes.
Hello, ma'am. Even in NAC group.
Hello. Hello.
हेलो सर.
हाँ,
morning.
गुड मॉर्निंग. मैं सर्टिफिकेट अभी भेज दूंगा. हाँ?
जी सर.
हाँ, चावक मॅडम सुन रहे हैं ना?
हाँ सर.
हा, सर्टिफिकेट मी तुम्हाला 5 मिनिटात किंवा संपल्यानंतर पाठवेल करेक्शन केलेलं, डिझाईन केलेलं. हा
हेलो. हाँ ओके.
हा, डिझाईन केलेलं सर्टिफिकेट तुम्हाला पाठवतो. ठीक आहे.
ओके. हेलो, दीपा कृपलानी मैम.
Yes, madam. Yes, madam.
Have you listened what sir said?
मैम वी आर लाइव. मैम वी आर लाइव ऑन यूट्यूब मैम.
चावक मॅडम राहू द्या, पाठवा आपण बरोबर त्यांना. ठीक आहे.
ओके.
मैम वी आर लाइव ऑन यूट्यूब.
हा, ओके. चावक मैडम, आदित्य सर ने ज्वाइंट हुए?
हाँ सर, होता है होता है।
हाँ ठीक है।
Hello.
हेलो, गुड मॉर्निंग सर।
Good morning, ma'am. Good morning, sir. Very good morning.
गुड मॉर्निंग, गुड मॉर्निंग, गुड मॉर्निंग। आई वेट यू। ओके
Sorry, sir. That day, because
नो
of that
सर,
electricity, the session got postponed. Nothing else.
डोंट वरी सर।
So, one thing I would really like to appreciate the way our Mumbai colleges have utilized this lockdown period. And that is really very nice.
Yeah.
Yes, that because rather than just sitting at home, if we do these kind of intellectual discussions, that really opens the gateway of all faculty, and in turn, it helps them to contribute to the economy and to the student fraternity, which is ultimately our tomorrow's, I can say, destiny. If students are strong, obviously economy will be strong.
Sir, good morning. Resource
Good
person
morning, ma'am. Good
Aditya, sir,
morning, ma'am.
I am going live now. Please be
Yes,
prepared.
yes.
Okay.
Sure, sure, ma'am.
Particular session, yeah.
नागा मैम,
Yes, ma'am. Shall I start?
Yes, yes.
Sure. Friends, a very good morning to all of you. I would first of all like to thank the Sadhubella College for giving me this opportunity to share my thoughts on Indian economy, the road ahead, friends. See, as we are all aware that Indian economy is today facing a challenge known as COVID-19. Not only India, but 185 countries in the
Uh,
world are
Sir,
yes,
excuse me. Kindly, sir, excuse me. Sir, kindly on your video, please. Your screen is not visible. I'm so sorry. Please. Yeah.
no, no, no problem.
Yeah.
Friends, basically, today the entire world is facing something known as a COVID-19 problem, or what we call it as a coronavirus problem. And because of that, economies globally have become into have gone into lockdown, and because of that, obviously, the economy is not in a good position. If we see our current GDP data, which has come just last Friday, last week, the GDP data had come, and it has come only 3.1%, friends. Only 3.1% is our current GDP data, which was less than the previous quarter data of 4.2%. This 3.1% GDP is lowest in 44 quarters. It is the lowest GDP data that we have seen. So this obviously creates a challenge for the whole economy, that how the Indian economy's road ahead will be. And I'm sure that, see, we will come out of this problem, but yes, definitely it will be a bumpy ride. It will not be that smooth. In fact, the fiscal deficit of the government has touched 4.6%, which was earlier 3.8%. So even the fiscal deficit has gone up. And we have already seen that Moody's rating agency, which is an international rating organization, has downgraded our economy from triple B to double B, and from an stable outlook to a negative outlook. The prime reason is the way demand and consumption has fallen in the economy, friends. And this is not unnatural. It was bound to happen because the economy went into lockdown, and today is the 75th day of the lockdown that was introduced on March 25th. But as now we are in unlock one, and slowly and gradually government is opening up the economy so that economy enters into a working phase. But again, we have to see the COVID-19 issue also, because in last 1 week, 60,000 cases were registered after the economy was opened up. 60,000 cases, friends. So obviously this will create a challenge for the economy. This will create a challenge for the economy, that along with COVID-19, how we are able to how we are able to deal the economy and bring it back on track. Now, as far as the road ahead is concerned, friends, basically, if we see in a different sectors, friends, will have different implication of COVID-19. So we will try to understand some of the sectors. बंद कर दो. See, if you see sectors like real estate, which has been worst affected, it was already in downturn from the last 5 years, and COVID-19 has created more problem for that sector. For the simple reason that work from home has become now a norm for most of the corporates. And even a company like TCS has clearly told that they would like to shift 25 to 30%, 25 to 30% of their workforce to work from home. So obviously, that will definitely create an issue, because if the people start working from home, and if the companies are comfortable with that overall concept, why would they spend money on real estate or the rentals? So that means that commercial real estate will have further downturn in the economy. So that is one sector, friends, which is again very important, because real estate contributes around 11% in the overall GDP. Plus, it creates lot of jobs for the construction activities and workers. So this is something what my worry is, that real estate as a sector will definitely face a downturn. If you see other sectors like tourism, aviation, and hospitality, these three sectors are also in real bad shape, because in aviation sector, without government's active intervention, they are on the verge of bankruptcy. Even the Boeing company, which is world's one of the largest airlines, has removed 12,000 people from the jobs. 12,000 people, friends. So that is again a clear indicator that the way primarily the world is going ahead, definitely different sectors will have a lot of pressure, and tourism, aviation, and hospitality will be allowed to work on a full swing basis only after December, what I feel, because by December this entire impact of COVID-19 may go away, because as per international reports, in September we can strongly expect a vaccine either coming from USA or UK. In fact, 2 days back, Donald Trump has clearly mentioned that 2 million pieces of vaccine they are in the verge of production, and it has reached an advanced stage of clinical trial. So if these reports are to be believed, then I feel that by September end we should have some concrete solution, so that by December end the world economy and Indian economy comes back on track. Apart from this, friends, information technology sector, the IT sector is something, friends, which will now become even more important after COVID-19. See, for the simple reason, the way today information technology has enabled the world to work, to survive, in spite of being in lockdown and in homes. So that is now a clear indicator that information technology will rule the world, means that will become even more important as compared to other sectors, because IT will no longer be used only by software companies, but it has become a part and parcel of everybody's life. So that is why if you see global giants are interested in investing in Indian companies. For example, if you see in Reliance Industries in the last 6 weeks, means during the lockdown, entire period of lockdown, 6 global investors have taken stake in Reliance Industries, and totally they have what I can say, they have been able to sell 18% stake for 78,000 crore rupees. This entire investment has gone into Reliance Industries for the Geo, that means the telecom arm. Why? Because Reliance Industries will no longer remain into only petroleum sector, but it is transforming itself into a digital company. And trust me, friends, since India has 1.37 billion people, data is the new gold. Always remember, data will become the new gold, because the consumption of data in India is enormous and will increase only because people's intellectual capacity, training, development, and career opportunities expand. So with that, data consumption is bound to go up. So keeping these in mind, friends, international companies and big investors are eyeing upon Indian market. So that is something we will have to keep it in mind. Especially in this COVID-19 times, friends, Indian economy during COVID-19, still I am confident that it gives lot of investment opportunities for people like you and me. We have a lot of investment opportunities coming up. For instance, if you see the stock markets have corrected by more than 35% from 42,000 levels, 42,273. We went to as low as 28,000, and right now we are somewhere around 34,500. This gives an ample opportunity for us to create a good portfolio using these COVID-19 times. You can invest in blue chip companies of BSE Sensex, in blue chip companies like Reliance Industries, HDFC Bank, HDFC Limited, Hindustan Unilever, Asian Paints, all standard companies. You can buy certain stocks on a monthly basis. Please understand, friends, that during this COVID-19, our economy will again come back on track and we will have a V-shaped recovery, for the simple reason that Indian economy is blessed with three key features: demographic dividend, domestic consumption, and high savings rate. And because of these three factors, you will find that our economy will always outperform the world economy by a sizable margin. If you take last 20 years data, our GDP is 7.5%. The world's average is 2.5%. So this is something very vital. We have to keep it in mind. Apart from this, when I said stock market investments, see the way stock market has come down and the way now it is rising. See, just last two data I will share with you. In the month of March, foreign institutional investors, they sold shares worth 61,000 crore rupees. 61,000 crore rupees, highest ever selling done by them in 1 month in Indian capital market, highest ever. It was even more than 52,000 crore rupees of selling what they did in the entire year of 2008 global financial crisis. But in the month of April and May, you will be surprised to know, in the month of April, FIIs have invested 14,500 crore rupees back into our stock markets. And in the month of this thing, and in June first week, you will be extremely surprised, friends. In June first week, this just 5 days, they have invested 20,000 crore rupees. Can you believe it? 20,000 crore rupees coming into Indian stock market in a matter of 5 days. So why these kind of investments are basically coming into our stock markets? The main objective here is that they are confident that our economy will bounce back like anything, for the simple reason, friends, that our demand and consumption does not go down below a certain extent. And from 8th, that is from tomorrow, restaurants, hotels, temples, and lot of other things are also likely to be opened in a phased manner. So you will find the demand and consumption will drastically rise. So the moment demand and consumption goes up in the economy, Indian economy will definitely come back on track much quickly as compared to global economies. Second, one thing very vital I would like to highlight here, that this is the time, friends, for our academician fraternity also to create a good investment mechanism for their future. See what I do, I'll share with you. Every month, monthly basis, or not in a lump sum way, but on a monthly basis, every month I buy certain shares of blue chip companies, 2 share, 5 shares, not a big amount, but small one. But you do it continuously for a period of 5 years, friends, and then see the kind of wealth you will create for your next generation, the kind of wealth you will create. So what I'm trying to highlight here is, friends, the more you remain invested in markets, the more capital appreciation you will get in the long term. For example, had you invested 10,000 rupees, only 10,000 in Reliance Industries IPO in 1977, only 10,000, you will be surprised to know that same 10,000 today is, friends, 2 crore 10 lakh rupees. Will you believe it? Because the way the stock price has performed and the way company gave bonuses, the investor will earn like anything. And that is the reason, friends, that in the long term, always remember that if you remain invested in blue chip companies, your probability to make good capital appreciation is very high. So in this lockdown, friends, when you have sufficient time, you can research out good companies of BSE Sensex and you can invest a small amount on a monthly basis. Always remember, when you buy stocks, when any stock which whatever you buy, two things you should always keep it in mind. The two factors are most important when you are buying a company. Number one, number one is basically, the first thing is you should check the net profit of the company. Net profit of the company is very vital, because if net profit keeps on rising, FIIs and mutual funds will buy your stock. So net profit is something very critical and vital. Net profit of the company has to go up on quarterly basis or 6 monthly basis, so that when net profit rises, automatically FIIs and mutual funds will buy that stock. So once they buy that stock, automatically the stock is going to perform and there will be huge capital appreciation for yourself. Second thing, very vital, a simple fact but very important, is that the debt equity ratio of the company should be as low as possible. Debt equity ratio of the company. See, debt equity ratio refers to what is the borrowed capital and what is the ownership capital. So if the debt equity ratio is less, obviously the company will perform far better, friends, because company does not have any financial obligation, it will not have any financial burden. As a result, company will be able to perform well and it will be able to deliver very good returns to the investors, to the shareholders. And that is the reason you will find that Reliance Industries is trying its best to become a zero debt company by March 2021. Why they are trying to become a zero debt company? This is the simple logic, that they want to become a zero debt company for the simple reason is because they are fully confident that if they become a zero debt company, even valuation will rise and they will be able to attract more institutional investors into the stock, and the stock price will rise like anything. For those friends who feel that stock market is volatile, or I don't have that much time to study, or there are other issues, then for them the best option is you go with a mutual fund. See, mutual fund is an indirect way to invest in stock market. It is an indirect way of investment in stock market, where you can invest through SIP, systematic investment plan, and you can create a monthly investment stream of minimum 500 rupees, 2000 rupees, whatever you are comfortable. Typically, you should invest in three kinds of mutual funds. Three types of mutual funds you can do an SIP. Number one, equity diversified fund, which is a large cap stocks oriented. That means a large cap equity diversified fund. Second, you can go with a index fund Sensex plan. Always remember, investing in an index fund will always be very useful, for the simple reason that when you invest in an index fund, what will happen in the long term? Index always rises, friends. You will be surprised to know if I share that when in the year 1999, when I used to do my internship, 1999, I used to do my MBA internship. That time, I have seen BSc Sensex at 2,800 with my own eyes, friends. I have seen BSc Sensex at 2,800 and NSE Nifty I have seen at 950 levels. So basically, it means that in the long term, friends, you will definitely make money using if you are invested in index. Index always rises in the future. Always remember this. Index funds will always rise. Why? Because index comprises of top companies, and as economies recover, the maximum chunk of foreign institutional investors' money will come into this index stocks only. So if you are invested in a Sensex plan or a Nifty plan, primarily Sensex, you will definitely make good amount of money, friends. So that is the second suggestion in a mutual fund. The third SIP, you can always do it in a sector fund like a banking sector fund, which in the long term always performs. See, always remember, friends, that banks are the backbone of an economy. So, and in India, private sector banks are relatively in a far better position as compared to government banks. So, if you invest in proper banking sector fund also, you will be able to generate good amount of returns in the long term. So, these are certain things as far as mutual funds are concerned. You will be surprised to know, friends, that in a mutual fund, every month 8,000 crore rupees is coming into stock market through the SIP route. 8,000 crore rupees every month comes into Indian stock market through the SIP route. And when I talk of SIP refers to systematic investment plan, refers to the retail investors investment. That means people like you and me have done an SIP of 500,000, 2,000, 5,000. So cumulatively 8,000 crore rupees comes. So you can understand the power of SIPs into Indian stock market. Third aspect I would like to cover is basically gold as an asset class. See, a lot of people feel that in this economy, when economy revives or basically in this downturn, why is gold rising? That is always the question in the minds of investors. Okay, by what makes gold basically rise? See, if you see gold prices have always gone up whenever there is a problem at the world economy. See, gold has inverse relationship with three things. Number one, stock market. Number two, world economic data. And number three, US economy. So whenever there is a problem in either of them, the gold prices will always rise. And when world economy starts coming in a better way, that means it is relatively normal. You will see gold prices coming down. So this is something you need to keep it in mind. In the year 2007, friends, if you see, the price of gold was only 7,000 rupees per 10 grams. From there, in the year 2008, when we had this global financial crisis, the prices went to 33,000 rupees per 10 grams. The price went to 33,000 rupees per 10 grams. And today it is at 47,000 rupees per 10 grams. See why these prices go up? Because whenever there is a global level problem, institutional investors, they will withdraw money from equity, mutual fund, insurance, and other things, and they invest that money into gold, because gold is most liquid asset after cash. Gold is most liquid asset. As a result, what happens is that since it is liquid asset and globally accepted, see, gold is accepted in all 189 countries. So what will happen is that institutional investors, they withdraw money from other asset class and they put it in gold, and as a result, gold price always goes up. So in your portfolio also, friends, you can have 10 to 15% exposure in gold. You can always have a 10 to 15% exposure in gold also. This gold you can buy not in form of jewelry. Please do not buy jewelry, because what happens is when you buy jewelry, making charges are added, and when you sell, making charges are debited. So hardly you will be able to make any income out of that. So when you are buying gold as an asset class, always remember, you need to keep one thing in mind, that you have to buy gold ETF, exchange traded fund, which is listed on BSE. If you go to bseindia.com, and on the right hand side on the main web page itself, you will see there is a box given in which you write down any name of the share and you get those details. So in that, just change it from equity to ETF option. So if you click ETF and then write gold ETF, you will find gold HDFC gold ETF, ICICI gold ETF, and these are real good investment instruments, friends, because it is just 1 gram of gold, 1 unit. So if the gold is at 47,000 rupees per 10 grams, 1 gram you will get at 4,700. But in this exchange traded fund, the price is only 4,200 or 4,300. That means you immediately get a benefit of 3 to 400 rupees. The question is why? Because when you are buying gold in a demat form, there are no making charges, there are no other administrative charges applicable. So your cost goes down by 300 to 400 rupees per gram. So this really helps you basically to create a good portfolio in the form of gold ETF units also, which will directly get deposited in your demat account. And here you can do one thing, friends. Every month buy small units. When you reach 100 units, you can sell that unit again in the stock market. And whatever payout you get, add some cash and you can buy 100 grams of gold biscuit. 999.9 100 grams of gold biscuit which Swiss make, which is the purest form of gold in the world, friends. And it is the most liquid asset you can have as an investment opportunity. Outlook on gold, friends, always remember, as world economy is getting more and more integrated, as the world economy is getting more and more integrated, more countries are basically, more economies are interdependent, interlinked. There are more chances that in the future, if there are problems related to world economy, say for example US China trade war again resumes, as both are not in good terms, or US has a problem with North Korea, as that was the case, what will happen is that basically gold prices will again start rising. So with the way the world economy is integrated, friends, it is very vital that you should have 10 to 15% exposure in gold also as an asset class. This is something I wanted to share as specifically related to gold. Apart from this, if you see property as an investment instrument, property or real estate. See, basically what has happened that 2003 to 2013-14, Indian property market had a very good time. Whatever you buy, you could easily get 40 to 50% capital appreciation. But then what has happened that property market drastically slowed down after 2014-15 because of two reasons. One, excessive oversupply. See, every second company entered into real estate telling I am an expert. The result was supply went up drastically, there is no demand. And second is unrealistic pricing, the way pricing has been done. So because of huge price, a very high pricing and unrealistic this, prices of gold were, the prices of real estate become unsustainable. And today the result is that we are again in a situation where even in city like Mumbai, 4 lakh units of houses are lying unsold, and in pan India, this figure is 12 lakh units. And especially, friends, after COVID-19, as I earlier also said, the real estate will have further slow down because that there are massive job losses in the economy. So when there are massive job losses in the economy, people won't be confident that they should go and take an EMI on their head. Today, you will also agree that during this lockdown, when jobs are unsecured and other things, the happiest or the secured person is whom? A person who does not have EMI on his head. He is the most happiest person. He is the most secure person. So the same logic will apply to real estate, that in this situation, people going and taking any loans is hardly any chance. So real estate will have more of a downturn. And as far as commercial real estate is concerned, this work from home will be now new normal. So when work from home becomes a norm, companies would feel that if my work can be done from home, why should I pay huge rentals for office spaces? And as a result, even commercial real estate you will see will face further downturn. So if you sum total all this now, friends, you should buy a house only if you are going to live in that, and that too in strict accordance with your budget. Please do not go over leverage. Do not take a huge loan because economy will take considerable amount of time coming back to normalcy. So please understand that if economy doesn't come back to normalcy, obviously there would be pressures on jobs and other things. So it is better that an unleveraged balance sheet or a person without a loan, his chances of survival and growth are much higher as compared to a person who has opted for a loan. So this is my humble request. And from an investment perspective, real estate is frankly a no-no. Should not buy any real estate instrument because trust me that in another 3 to 4 years, this sector will not see any uptrend. It will always be in a downtrend because of the cumulative factors like huge oversupply, unrealistic pricing, RARA getting introduced. So because of which the entire black money has been evaporated from the sector and general slowdown in the economy. Lastly, friends, the last asset class which I want to highlight was basically is insurance. See, a lot of people feel that in insurance, what is the return? But please understand, insurance is not for earning return. It is primarily a kind of protection. You are taking an insurance plan for protection of yourself and for your beloved ones. In insurance, you should have two things in hand, friends. One, a mediclaim plan with a cashless facility. That is very vital, friends. Mediclaim with a cashless facility, because in case of any hospitalization, your hard-earned money should not go away, or you should not face difficulty arranging cash to pay the bill. And also, what happens in a normal medical policy, what will happen is that you will have to primarily pay the bill in cash, and then when you deposit all the papers, you will get back your money. But this will take around 35 to 40 days. So that point you will have to, friends, keep it in mind. Apart from this, if you try to basically see term plan, term plan is something very vital, friends. In a term plan, the basic feature is that if you survive the term, you will not get anything. But if something happens to the person, the family will get a huge amount. So term plan is very, very critical as far as the working person of the family is concerned. The term plan should be in the name of the main bread earner, so that in case of any unfortunate event, the family gets a huge amount, and at least they are not troubled with financial crisis. So this is something, friends, I wanted to discuss on an overall basis, that during this COVID-19, friends, if you keep these things in mind and design a portfolio, obviously you will be in a better position to have a more financial freedom, more secure future. See, today a person who is financially free obviously is the happiest man, because then you don't have to worry about day-to-day routine, and you can relatively live your life comfortably. So that point, friends, you will have to keep it in mind. As far as, friends, economy is concerned, Indian economy is very resilient, friends, and we will surely come out of this phase also. See, if you see 2008 global financial crisis, in during that time also, India's GDP was 6.3%, world average was 1.5%. If you see 2011 European Union crisis, our GDP was 7%, world average was 2.5%. And if you see 2015 China crisis, our GDP was 7%, world's average was 3%. So we have always outperformed the world GDP by a sizable margin. And going ahead, I am sure that we will continue to do so, for the simple reason, friends, that our economy is domestic consumption and demand and consumption driven economy. We are not an export oriented economy like China or Japan, which are dependent on global markets, or Europe, which is dependent on tourism, or USA, which lives on credit card. In fact, if you see, there is something known as a debt to GDP ratio. As we have debt equity ratio for companies, for countries, there is debt to GDP ratio. That means what is the debt in the economy and what is the size of the economy. Now, if you basically see that the global average is 69%, debt to GDP ratio, the global average is 69%, India is 57%. So we are way below the global average in terms of leverage balance sheets. We are relatively much secured because of our savings habit and relative our culture that we try to avoid loans. But now the figures you hear, USA 103%, that means the entire economy is loaded with debt capital. Europe 92%. If you see Greece 177%, Spain 120%, Italy 160%, Japan 229%, and China the worst 260% is their debt to GDP ratio. So if I put it very simple terms, friends, it refers to that Japan's income is 100 rupees, it has to pay back 229 rupees. China's income is 100 rupees, it has to repay 260 rupees. So obviously these economies won't come out of these troubles very easily, and it will take considerable time for the world economy also to settle down and to come out of this. So these things you will have to, friends, keep it in mind. So with this, I would now go for question answer session, where we have a comfortable time so that I can answer all your questions. So please ask any question related to Indian economy, world economy, and even on investments also, that during this scenario, how you can invest and create a good portfolio. Yes, ma'am.
Hello.
Yes, ma'am. Yes.
Thank you so much, Aditya sir, for this wonderful and knowledgeable session. I hope everyone got so much of information and enjoyed today's session.
Yes. Yes.
Now I would like to request Ms. Bhageshri Lat ma'am to proceed further with the question and answer round.
Yes. Ma'am, I can see the chat box. So if they can write on chat box also, it is fine. Or if you read also, it is fine. I am comfortable.
Okay. Good morning, sir, and good morning, all of you. This is Bhagyashri Lal. The first question is: I have investment in stock market, mutual
Okay.
fund, SIP, but I have invested in FD, RD, term insurance, and medical insurance. Do I need to invest in FD and RD?
No, no, ma'am.
Do I need to invest in FD and RD?
But he already has an investment in stock market and mutual funds, right? Ma'am?
Yes, sir.
Okay. See, friends.
Mutual fund, SIP also.
Okay. See, basically, if you are one thing, please understand, friends, that fixed deposits and recurring deposits are a must. You should do that because there the objective is safety of capital. So if you have fixed deposits every month, if you can do certain amount of fixed deposit, certain amount of recurring deposit, obviously you will be in a much better position to be financially safe and secure. So kindly do fixed deposits and RDs. That is obviously that should be a part of your portfolio. I did not touch upon that because that is a very old and traditional instrument, but the most important instrument which we should keep it in mind. So that is something very vital and you should always go ahead with that. Apart from this, you can also do a mutual fund SIP, friends, so that in mutual fund SIP, you can create good amount of wealth in the long term. Always remember, you can create good amount of wealth. So this is something very vital. So FD, RD, you should do it, friends, and along with that, SIP in mutual funds. So this is something you will have to, friends, keep it in mind. Clear? If you are able to do these three regularly, you will be financially very secure. And in SIP, you will create wealth. And in FDRD, your safety of capital will be there. Yes.
Okay. The next question is whether trading is better or investment is better in stock market.
Okay. See, very nice question. See, as far as trading is concerned, trading are of two types. One is basically intraday trading. Second is delivery-based trading. Intraday trading, no, you should never do because in intraday trading, you will always incur a loss, friend. So never go with something known as intraday trading. In intraday trading, at least in my 17 years, I have not seen anybody earning. Yes, as far as delivery-based trading is concerned, you can consider doing that because in delivery-based trading, what happens is you are making the full payment and taking stocks in your demat account. See, I give you a very simple example. In the month of March, Reliance Industries went down to 900 rupees. Now, suppose I buy 100 shares at 900, I am paying 90,000 to the broker. Now, within 60 days, in the month of May, it went to 1580. That is per share, I am making 680 rupees. So, 100 shares means 68,000 rupees I made. So, this is called as delivery based trading. So, delivery based trading is always more vital. In delivery based trading, always remember, keep a target of 10%. So, the moment you get 10% profit, you have to book that profit. That is something very vital, friends. So if you do that, yes, delivery based trading is you can make money in delivery based trading. That is a more better option. And long term investment will always create wealth. But in long term investment, friends, it is important that you should to understand that you need to have a lot of patience. For example, long term investment means that every month you buy Reliance, ICICI, HDFC, and you don't sell them for 10 years, 15 years. Now, that is obviously the best of all strategies. But the key question is, do you have that much of patience? Do you have that much of confidence in stock market and economy? If yes, then you can surely go with that model. No doubt in that. Yes, ma'am.
Yeah, the next question. Yeah, the next question is which is most risky, option trading or intraday?
Option trading or intraday. See,
Intraday.
basically, both are extremely risky, friends, because in options also, it is not advisable to carry overnight position in options. Options are very, very volatile. I don't know whether you have seen the option screen or not, but if you see their screen, in one day, you will have a volatility of almost 100%. So taking options position home, that is carrying forward that position for tomorrow, is never a viable option. So whether you do intraday or you options trading, the risk obviously is very high in both. Yes, in options, the only difference is that the moment you put a trade, your loss is limited only to the amount of premium paid. Whereas in naked intraday trading, the loss and profit both are unlimited. Whereas here what happens is, suppose I buy an option worth 5,000 rupees, my maximum loss is only 5,000. I won't incur more loss than that. But in case of cash market intraday trading or in case of futures intraday trading, the risk is unlimited. So So in that sense, yes, you can go with options trading. But again, I would suggest that rather than doing any such thing, it is better you do investment over a longer duration. In investment, you will make more amount of money with lot of peace of mind. Yes, ma'am.
The next question is, but gold has a GST on selling and buying.
Gold, if you buy from the stock exchange mechanism, there is no GST applicable. If you buy from the physical market, GST at the rate of 3% is applicable. When you buy this
Okay.
mutual fund units, there is no GST on that.
So next question is saving growth. How can we increase, sir?
Saving growth, I did not get.
Yeah.
See,
Saving
basically,
growth, how can we increase? Means
basically, please,
whatever they save,
how
wherever
can,
they save, wherever they save their money. So how can we growth that
yes.
saving money?
As I told earlier also, friends, whatever your surplus money will be, the first option is that every month do fixed deposit. See, basically, fixed deposit you have to always do because that will create fixed safe capital for you. Second, go with an SIP because SIP is relatively safe as compared to direct investment in mutual fund. Direct investment in stock market. Mutual funds are always better because in mutual fund 40 to 50 companies are there in which you are investing. So you can go with an SIP investment also. Third, you can basically try out gold as an investment option, gold ETF. So, and this is everything you have to do on a monthly basis. See, again, I repeat, monthly investment is always better, friends, as compared to lump sum. Always invest on a monthly basis so that there is no burden on your wallet. So, over a period of time, when you keep on doing such things, obviously you will generate good amount of capital, and in the long term, your capital will always grow and you won't have much of a difficulty. So that point you need to, friends, keep it in mind.
The next question is, which mediclaim and term plans are better? Please suggest few names.
See, basically, I have personally taken from HDFC. HDFC Life is the best because their claim settlement ratio is basically more than 99%. And in whenever you the claim settlement ratio is that when a claim is done, how much
Okay.
payment they do. So that is basically claim settlement ratio is 99%. So I personally always prefer buying products from HDFC. So HDFC term plan you can take and HDFC Mediclaim you can take, which will ensure that in the long term you are able to do things in a better manner.
The next question is pharma sector best for investment now?
Yes, pharma sector you can definitely consider for investment because see after COVID-19 the demand of pharmaceuticals even during COVID-19 after COVID-19 the entire outlook on the healthcare sector will rise like anything. See what will happen? People have now become more health cautious. Government will spend more money on the healthcare sector, and in any case, India spends only 3% of the GDP on healthcare, whereas the global average is 10%. So what I feel is that as far as pharma sector is concerned, you should buy good quality stocks like Sun Pharma, Dr. Reddy, any standard company you should buy. And again, I would say that buy on a monthly basis. See, please understand, friends, that never put all your money in one shot because if you invest in one shot, there are chances that if market goes down, your money will get blocked. So if you are buying on a monthly basis, obviously you will be safe, secured, and you will be able to perform well in the long term. So you can buy companies like Sun Pharma, Dr. Reddy, Lupin. These are good stocks to buy. Yes, ma'am.
The next question, the next question, are they support private players to downsize the government companies?
I did not get. Are they?
Are they supporting private players to downsize the government companies?
See, please understand one thing, friends. As the economy progresses now, obviously capitalism will ultimately rule any economy. See, whether you take US, Japan, Europe, why they are so ahead of us? For the simple reason that their talent is rewarded, and who gives the reward to the talent? It is primarily the private sector because they pay very well. So obviously, in the long term, what will happen? Even India will have more of private companies giving better facilities, better competitive rates. See, I give you one simple example. You buy a term plan from LIC, just compare. I don't say buy, just compare the premium of LIC and HDFC Life. You will immediately get that answer. Because in LIC, what will happen? Since it's a government company, they will have their own charges system, slow working, and other things. And plus, the rate will also be not competitive because they are not bothered for profit. Whereas in case of a private company, the efficiency, effectiveness is much higher because they are answerable to the investors, answerable to the fraternity. So they will always try to give more competitive rates. So this is something which we need to keep it in mind. So privatization will be the order of the day, and going ahead, you will find lot many government companies also getting converted into private companies.
Okay. The next question. Sir, I see the government is not coming up with good plans for BSNL for data requirement. In fact, of having large setup, why?
See, unfortunately, what has happened? Unfortunately, what has happened is that see, government has not been able to capitalize on government assets like BSNL, MTNL. It's a real fact, friends. Rather, Air India also. Had government run these companies professionally, had ensured that these companies are turned around and professional management is set, this would have been a far better situation, and we would not be totally dependent on private companies. Today, unfortunately, what has happened, ma'am? Going ahead, now you will find private companies only controlling Indian economy. It is a real fact, and that thing may opt well also if we are able to have proper systems in place. But if proper systems and checkpoints are not in place, you will find private companies taking undue advantage, and ultimately the cost has to be borne by the retail customers. So it is an unfortunate point, but yes, a real point.
Yeah. The last question. In
Yes.
present income is decrease, how can saving will increase?
Ma'am, it is very obvious that your savings cannot go up unless your income goes up. So basically, first of all, if those people who have a stable job and whose salaries are intact are the lucky ones who will be able to save even during these COVID times and will be able to create relatively good amount of capital. But for those who have lost jobs or there have been problems, obviously that thing may not augur well, because first of all they will have to bring their income to the pre-COVID level. They will have to have good income so that they are able to save money and are able to create capital appreciation over a period of time. Different life is a journey. There is lots of ups and downs. Only thing is that when downside comes, we have to have patience, and ultimately time is the solution for everything. So as other crises have also passed in Indian economy, this COVID-19 will also pass out. In my career of 17 years, I have seen so many crises in financial markets, but something like COVID-19, even I am seeing for the first time. But I am sure that the kind of resilience Indian economy has, friends, going ahead, you will find we will come out with flying colors, and that will install further confidence of global investors in our economy. That is what I can say.
Sorry, sir, there are one more question.
Sure, sure.
Yeah. Sir, you told that do not invest in real sector, but when
Real
we
estate, yes.
refer subprime crisis in 2009, after this real estate price increased by approx 50%.
Yes. See, ma'am, understand that was the time when the supply was limited. See, from 2009 to 2015, what has happened? As I said, the supply drastically went up. Now, when supply goes up, obviously, what will happen? Pricing will come under pressure, na? And these units have been constructed at abnormal high prices. See, why today in Bombay, lakhs of houses are lying empty? Because the prices are outside the reach of a common man. Today, common man is no longer in a position to take a loan of 70, 80 lakhs, and then his entire life goes on just paying that EMI. Thus, at the same time, if God
See,
forbidden
how are
something
you?
happens to his income, that is salary, again he's in a big soup. So, keeping these things in mind, you should always understand, friend, that real estate had a good time. I am not denying that fact, but that good time is over, and this tough time will at least last for another 4 to 5 years. So, what I personally feel is that real estate sector for investment, trust me, is an absolute no-no.
Thank you so
Yes.
much, sir. Thanks a
Hello.
lot.
Hello.
Yes, ma'am.
Yeah.
Thank you so much, Aditya sir, for
Thank you,
solving
ma'am.
all the queries clearly. Thank you, Bhageshri ma'am.
Thank you, ma'am.
Thank you, ma'am.
Now I
Thank you
would
so much.
like to request our Honorable Principal Sir, Dr. Vasant Pandit Mali, to share few words.
First, I am very much thankful to Aditya sir giving
Thank you, sir.
his very nice speech in a 2 days FDP program, and I am also all participants from other colleges from various states I am also very much for organizer a good uh, arrangement of the FDP program. This, this FDP program also useful to all participants in future. Thank you.
Thank you, sir. Thank you so much for this opportunity. Thank you.
Welcome, sir.
Thank you so much, Principal Sir.
Thank you,
Welcome,
ma'am.
welcome, ma'am.
Now I would like to request Ms. Anagha Kotekar ma'am to give a vote of thanks to our honorable guest, Dr. Aditya Srinivas sir.
Thank you so much, ma'am. Before moving further, I would like to give some instructions to our delegates that feedback attendance feedback form, like attendance feedback form link will be posted in the Telegram group after completing the session. And daily limit of certificates is only 100, so do not panic. Everyone will get it. I, Assistant Professor Anagha Kotekar, got this opportunity today to present vote of thanks on behalf of Sadhubella Education Society, J. Votumal Sadhubella Girls College. I would like to thank the management of the college. I would like to extend a special thanks to our resource person, Dr. V. Aditya Srinivasa. He is a Chief Operating Officer and Chief Economist at Bombay Stock Exchange Brokers Forum. Thank you so much, sir, for giving knowledgeable session on both the Ds. You explained both the topics in a brief and in a very simple way. So we are blessed to have you as a resource person. Thank you so much, sir. I
Thank
would
you
like
very
to
much.
thank you. I would like to thank to our honorable director of this national level FDP program, Dr. Vasant Mari, sir, principal of our college. Thank you so much, sir, for guiding and supporting us in all the work which we did for this webinar, for this FDP program. I would like to express my gratitude to our IQSC coordinator, Dr. Dattatri Kalbande, sir. Thank you so much, sir, to guide us in each and every step. I also express my gratitude to our BMS and BBI coordinator, Mrs. Smita Chavak, madam, who is always supporting to us and guiding us. Thank you so much, ma'am, for encouraging us for this 2 days FDP program. Thank you so much. As no program can become successful with a single person, so I extend my big vote of thanks to our organizing committee. I would like to give special thanks to Professor Deepa Kriplani, madam, for providing all technical support, which helped a lot in success of this FDP. Thank you so much, Pranjal madam and Ripha Maghija madam for doing anchoring, Sia madam and Bhagashri madam for making Q&A session so interesting, and Sophie madam for being
एक
an
दिवस म्हणून.
amazing backup team. Also extend my thank you to Department of Commerce and non-teaching staff. Thank you so much everyone for being there and doing a great job. And a big thank you to all the delegates who attended this FDP program from different states of India, who blessed us with their presence and took out valuable time. A lot from their busy schedule to extend and to attend this 2 days FDP program. Thank you so much.
Video.
Please take care, all of you. Stay home, stay safe. Happy
Thank you,
India.
ma'am.
Jai Hind. Thank
Thank you,
you.
ma'am. Thank you.
Hello.
Hello.
Now I would like to request Ms. Chavak ma'am to share her views.
Respected resource person, Dr. V. Aditya Srinivas, respected principal, Dr. Vasant Pandit Mai, my colleagues, and all participants. Myself, Mrs. Smita Chavak, as an organizing secretary, presenting the two words in this concluding of this 2 days successful FDP in collaboration with Bombay Stock Exchange Brokers Forum. Faculty development program are organized not only to improve the educational technique, but also for administration, overall planning and development of faculty members. Due to the situation of the COVID-19, the knowledge sharing has been shifted to webinar mode. BSc Brokers Forum always tried their level best to impart the practical knowledge to faculty members and students fraternity. As the last 2-3 years, our college has conducted many activities at college level with BSc Brokers Forum, and hence we have decided to work in collaboration for their project, spreading financial inclusion and financial literacy in this challenging time among the faculty members. I'm very happy to say that after the first session on investing in this challenging time of FDP, many participants have described it as an outstanding and knowledge gaining session. Today's session also explains the Indian economy road ahead in an excellent way. Hmm? And the knowledge gaining session really. All the faculties have got the knowledge regarding the Indian economy and how it's going to road ahead. I'm very much sure that both the sessions of the FDP will be helpful to the faculties not only for teaching purpose but also for their individual financial planning. Thank you very much, sir, and thank you everyone, and thank you all the enthusiastic participants for making our FDP so much successful. Thank you very much.
Thank you so much, Avak ma'am. Thank you all the participants and all the dignitaries.
Ma'am, please stop recording as well as live streaming.